Welcome everybody to Gleeds and Freeth's Disruption Claims Forum. To those of you joining us from around the world, my name's Chris Soph. I'll give you a brief introduction. I serve on the supervisory board of Gleeds, and I also head our international dispute advisory offering. I'm a past president of the Chartered Institute of Building, a fellow of the Royal Institution of Chartered Surveyors, and I serve as a national panelist on the American Arbitration Association. And I'm speaking to you from Atlanta in Georgia, USA, at 7 a.m. in the morning with a strong cup of coffee. We have speakers today, truly international, from the UAE and the UK, and we're being coordinated from Australia, so it's absolutely an international webinar. This webinar follows our earlier one on disruption claims for money on construction and engineering projects in the Qatar market, but today we're going to be a bit broader. We had a terrific response to our first webinar with over 240 people attending from 34 countries around the world. While we focused on the Qatar market, then it's fair to say that we discussed everything we discussed had a much wider application to projects in the Gulf region and even around the world. Last time we only managed to answer a few questions from the attendees, so we'd have liked to have answered many more. So today we've grouped the questions, and we're going to try to provide feedback to all the key questions, and then we'll spend about 30 minutes on your questions from last time, and then we'll also have another 30 minutes for questions this time. So we're expecting that the second part of today's webinar to be a lively discussion on the issues that you're facing on your projects. We ask that you please submit your questions using the Q&A function on the Zoom platform. We'll attempt to get to as many as possible during the second half hour, so it's really down to you guys to get the most out of our experts in the time available. Just a quick recap on the first webinar. Firstly, we considered disruption claims a hot topic over the last 12 months, as everybody knows, given the pandemic. It seems a number of issues we discussed reflected the experiences of our attendees. A number of questions concerned how the contracts deal with, or even don't deal with, the effects of the pandemic on the time and costs of projects. Secondly, we look at the contractual positions again in close terms, in terms of the events that apply and what parties can do to protect themselves contractually against the risks posed by the pandemic. And also, previously we explored the importance of record keeping, whether you're making or defending a disruption claim. Many questions raised by the participants concern what type of documents need to be kept and how those documents stand as evidence that can be used to make or defend the claim. So we'll look at the issue of evidence and records a bit more closely later too. Our panel again consists of legal and technical experts from Freeth's and Gleeds. This is a good point to remind you that Gleeds and Freeth's have combined on this our construction disputes A to Z initiative, which we launched this year. And the idea of this initiative is that we can offer clients in the Gulf region and around the world access to one-stop technical, contractual and legal advice from both firms. So if this webinar raises any issues on your projects where you think we could help, please don't hesitate to get in touch with us. And that would be at advisory@gleeds.qa. So with that, let's move on with the main business here of the forum, and I'll let the speakers introduce themselves. Alex.
Thank you, Chris. Good morning, good afternoon, good evening, everybody, wherever you are. Thanks for joining us. I'm a partner and I specialize in construction and engineering law with Freeth's. We're a law firm and I'm based in the UK, but I've got an international practice. I've got experience of projects all around the world, and I've worked on a number of construction engineering disputes for projects in the Gulf region, the wider Middle East, around the world.
Thank you, Alex. On to Craig Beeson of Gleeds. Craig, you're on mute. I think you're on mute, so unmute yourself.
Yes, apologies.
There you go.
Yeah, thank you, Chris, and good afternoon, everybody, or good morning, depending on where you are. I'm the GLEADS Director for Dispute Advisory Services for the Middle East and Africa region. I specialize in alternative dispute resolution, claims drafting and defense, contract management, procurement advice, and expert witness testimony on contractual and quantum related matters. I've got 20 years experience across all sectors in the construction industry, and 17 of those have been in the Middle East. I've worked for and on behalf of various leading contractors, consultants, and clients in the region and internationally, assisting with the avoidance, mitigation, and resolution of varying types and volumes of dispute.
Thank you, Craig, and welcome. This is your first webinar on this platform, I know. So a little bit about the questions policy. Please remember to submit your questions to the Q&A box, and we'll allow time at the end. We'll be gathering them up and endeavouring to answer the key ones at the end of the webinar. If you have any questions that you would like to discuss after the webinar, again, submit them by email to advisory@gleads.qa. So moving on to the first topic. These are questions about how contracts deal with the pandemic and COVID-19. And the first question goes to Alex. Alex, what category of events in contracts does the pandemic fall under?
Thanks, Chris. I think the first and obvious point to mention here was that at the onset of the pandemic, it did not of itself neatly fall into any one contractual event in many of the standard form contracts that we see used in the engineering construction industry. For example, epidemic is a specific force majeure event in the IChemE Red Book, which is the EPC turnkey contract, but that's something of a rarity. Most of the standard form contracts, FIDIC is a key example, don't contain specific entitlements for the contractor to claim an extension of time and or cost for the impact of a pandemic on the project. And so this question is actually the question that many clients were asking about 1 year ago in relation to their projects. And the answer, unfortunately, was it's not always straightforward. And unless the contract specifically dealt with the effect of pandemics or epidemics, then I think it was helpful to consider 3 key points. And the first was whether the owner had taken any action that may have prevented the contractor from carrying out the work in circumstances where otherwise it could have continued. For example, some owners would unilaterally close the project site in response to information that was being given by the government, certainly in the UK, but there was no actual government advice to do that. Secondly, the change in law question came up. So we were considering whether there'd been a change in the law that meant work on construction sites had to be stopped or suspended, for example. And thirdly, if neither of those 2 things applied, we were looking at force majeure clauses and whether a force majeure event had occurred within the meaning of the contract. So understanding the factual position in relation to those 3 issues helped us to determine whether the event was either an owner's act of prevention or hindrance, and if so, then typically the contractor is entitled to claim extension of time and additional payment. Was it a change in law? If so, then again, contractors typically entitled to extension of time and possibly additional payment, depending on the terms of the contract. But one of the key points we were looking at was, well, whether the law had actually changed. For example, if a government implemented existing emergency powers that it already had, then it generally wasn't a change in the law because the law hadn't changed. And finally, was it a force majeure event? Was it unforeseeable that neither party could have provided against at the time the contract was entered into? Well, clearly, the COVID-19 pandemic was not known about prior to about January 2020. So in most cases, force majeure was the relevant event for the purposes of the contract in the absence of anything else applying. That's problematic because typically force majeure only entitles the contractor to extension of time, not additional payment, unless the contract's been modified. So that created quite a problem for contractors. And the answer was, in some cases, I think parties just had to agree alternative arrangements that were outside of the contract. We saw a lot of collaborative working, particularly in the UK, and a lot of owners and contractors signed up to what was called the conflict avoidance pledge. That meant that they wouldn't pursue disputes against each other due to COVID-19 effects because it was so unusual. And some owners also were looking at compensating contractors, particularly on the bigger projects, because I think they were taking the view that if you put the needs of the project before everything else, you realize that there is no project if there's no contractor to carry out the work.
Thank you, Alex. So a lot in there. Was it force majeure, or was it owner's interference, or was it change of law? And of course, as we say over here in America, force majeure claims are excusable but not compensable. So as Alex explained, it's hugely important to understand how the contract addresses those different causal events in order to get your claim right. Craig, do you have any additional comments on that?
Well, as Alex has stated, this is always going to be a matter of specific contractual interpretation. In my experience over the last year, the owners and clients, they've been cautious in their approach and have not really given direct instructions to suspend or resequence works because of COVID. As such, unless a change in law has been made, the best approach is probably to use the force majeure conditions, but this will be time and not money, which still alleviates the burden of liquidated or delayed damages, but it doesn't help with the cash flow burden.
Thanks for that, Craig. Second question on that topic to Alex. Can the impact of COVID-19 fall within adjustments for changes in legislation as per subclause 13.7 under the FIDIC Yellow Book?
Yeah, thanks, Chris. Well, let's remind ourselves what subclause 13.7 says, and I'll paraphrase it. It provides for the contract price adjustment to take account of any increase or decrease in cost, capital C, because it's FIDIC, resulting from a change in the laws of the country, which include the introduction of new laws and the repeal or modification of existing laws, or in the judicial or official governmental interpretation of such laws, which are made after the base date, affects the contractor in the performance of his obligations under the contract. So if the contractor suffers or will suffer delay and or incurs cost as a result of those changes in laws or interpretations, then the contractor is entitled to extension of time and payment of cost. Breaking all that down, there are some key components of that clause that I think need to be considered to answer this particular question. So let's walk through it a point at a time. First of all, there has to have been an increase or decrease in cost resulting from a change in law. If there's no effect on cost, then there's no entitlement. Secondly, the change has to be to the laws of the country, which is a defined capitalized term in the FIDIC form. So typically that's the country in which the works are being carried out. But if the site, for example, is in Oman and the change of law affects the laws of Malaysia, which affects the contractor's supplier who's based in Malaysia, then that's not a change in law for the purposes of the contract, unless it says otherwise. Thirdly, a change in the law includes the introduction of new laws and the repeal or modification of existing laws. So that's quite wide. But note, as I mentioned at the outset, that would not appear to include to capture the implementation of existing emergency powers. So, for example, if the government always had the emergency power to impose curfews, which may affect labour's access to the site, for example, then that's not caught by the clause. I think there's a potential argument in that wording, however, about whether the implementation of existing emergency powers amounts to a change in the judicial or official governmental interpretation of the laws. Now, that suggests to me that that's not about new law, that's about a change to how the laws have always been implemented. And it seems to be a question of fact as to the mechanism that the government used to bring in the emergency powers. So I think that creates quite an open question there. Next, the change has to affect the contractor in the performance of the works. So if, for example, the government introduced, let's say, mandatory daily COVID testing for the entire workforce, however unworkable that might be, with quarantine following any positive tests, then obviously that would affect a contractor, most likely in terms of loss of productivity, and certainly loss of output. Finally, change has to be after the base date, which again is a defined term. So that will not affect contracts entered into today, unless the law changes again subsequently, which I suppose is always possible. So I think the answer to the question is yes, the impact of COVID-19 can fall within a change in law under clause 13.7, but the key components of that clause need to be met and assessed against the facts in each particular situation. And it's certainly not the case that there's a blanket yes or no answer. I mean, you'll have noted from my explanation, there's a fair amount of wiggle room in that clause to argue it either way. So whether it applies, I think, depends very much on specific facts of what happened in the relevant country and in relation to the relevant project. And I think as a general point, parties are well advised, certainly at the moment, to be aware of, to follow and to document government actions and their effect on the construction projects, as and when they're taken.
Thank you, Alex. That's a fascinating one. I was chatting with somebody the other day who's actually a claims consultant concerning a large claim in Canada where the provincial government ruled that the workforce had to reduce from 1,600 to 800 and then again down to 400. I figured that was a change of law, but they may have had those powers already. But obviously that significantly disrupted the productivity and the project outcomes. So that would be a classic example there of whether you'd have to figure out whether it was a change of law or whether it was just a government enacting its existing powers in order to make a claim.
Absolutely.
Craig, any additional comments on that?
Well, Alex has stated it's possible that change in law could be used as a basis for claim relating to COVID, but it relies on the stringent pre-requirements to exist. But also, we need to consider the geopolitical landscape. For example, in the Middle East region, the majority of projects are government funded, either directly or indirectly. Hence, claims raised on the basis of a change in law are not usually appreciated or accepted by public sector clients in this region. Hence, cognizance should be made that claims raised on the basis of a change in law in the MENA region, at least, will be difficult to resolve in the first instance and will likely only be able to be resolved with a formal dispute proceeding or as a bargaining chip to resolve other disputed items that may be on the table.
So there's a cultural resistance to realistic claims in that regard. That's an interesting one. I don't know how a contract would ever cover that.
Oh, well.
Yeah. Alex, third question on that topic. What exactly should we specify in the contract in order to avoid a claim or an extension of time or an additional payment related to the pandemic?
Yeah, thanks.
That might come from the same quarter there.
It may well do, yeah. I mean, I take from the question that that's either an owner asking in relation to its contract with a contractor, or it's a contractor asking in relation to its contract with a subcontractor. So I'll use the terms owner and contractor in the answer, but it's equally applicable to contractor and subcontractor as well, of course. I think if the intention is to do that, i.e. put the risk of time and additional cost associated with the pandemic on the contractor, you may not need to change the contract at all, depending on the contract that you use. As I mentioned earlier, most standard form contracts don't specifically deal with the time and the cost risk of pandemics, in which case it's probably a contractor's risk, subject to whether there's any act of prevention or change in law or force majeure, to whether that applies, as discussed earlier. But I think force majeure is a narrowing window because, of course, now it's a foreseeable unknown event. So it's, I think, hard to claim force majeure at this point in time for COVID because everybody knows about it. But in any event, I think even taking that point of view, I think it's always better to make expressly clear in a contract the consequences of a known risk occurring. So specific drafting, I think, has to be included at whatever your view is. So in this example, I think if I were drafting the contract, I would say something like the parties acknowledge and agree that the contractor bears the risk for and has included within its schedule and contract sum the time and financial consequences of an adverse impact on the works associated with the COVID-19 pandemic in the country in which the works are being carried out. And you could adjust that however you saw fit. Whether you should do that, I think, is a different question. My personal view is contractors are unwilling to take on the time and cost risk of COVID in all cases, certainly, because the question for them is, to what extent does the contractor consider the risk to be a manageable one? And in a mega project of the type that you get typically in the Gulf region, taking on that risk, I think, could be potentially ruinous for a contractor. So the typical commercial position that we're seeing parties reach, I think, in general, very general terms, is that owners are agreeing to compensate the contractor in terms of the time, the extension of time, relieving them from delay damages. But there's a real question over the additional payment. So I think in drafting terms, extension of time can be dealt with quite simply. It's just adding another event. So if you were using the FIDIC Yellow Book 99, you'd include a new event under clause 8.4, and that would take care of that. In relation to the additional payment, again, the drafting is not difficult, but I think on one hand, I can see why owners might consider that the contractor should bear all the financial risk associated with the pandemic. because the contractors do that in relation to many other risks a lot of the time. But I think on the world's largest projects, the risk could just be too high. I mean, if to take an example, if we assume that there's a very substantial impact on the works resulting from COVID, let's say 50, 70% of the workforce have to self-isolate for a period of time, and that could have quite a drastic effect on productivity and output, which is not going to occur all at once. It will occur over a period of time, probably spread over many months. And in some markets, I think it could be difficult, if not impossible, to replace labour that simply. So should the contractor take all of that risk? This is a really good question. And in my view, I think owners need to consider the needs of the project. If the contractor suffers a loss of productivity, it's likely to cause delay. That means delays to the owner's ability to generate revenue at the end of the day, because the asset completion gets further away. So I think there's a trade-off. The owner needs to think whether it's better to support the contractor through a period of delay and disruption, so that, in the worst case, the contractor doesn't simply become insolvent and lead to the need to be replaced. And there's the delay and other issues associated with that. But I think the trade-off is one of supporting the contractor financially through a pandemic and securing the revenue stream generated by the completed project. It may be cheaper to pay off the contractor if you get your revenue on stream quicker than you were going to. So I don't think it's as simple as saying the contractor should just take the full time and cost risk in all cases, although I think in certain markets that will be an expectation. What I would say is that Freeths have developed COVID clauses for standard form contracts, and whether you're an owner or a contractor, the legal advice is a recommendation that the clients use them.
Thank you, Alex. And I think from a general modus operandi standpoint, it's very key for owners to take responsibility and fair positions on COVID clauses and claims. When all said and done, nobody contemplated what was coming at the market or the world in this regard. And so we're strong advocates for negotiating shared risk arrangements. And then as these situations have cropped up, conduct grown up negotiations to get projects through this extraordinarily challenging period in history, and pull together and try and be reasonable, because the alternative's not a pretty one to fight it out. And so we're seeing a lot of contractors and owners endeavour to get around the table and solve these issues over here in the US market. And it's worked very, very well in most cases. Craig, would you care to elaborate on that one?
Yeah, I mean, when forming a contract, the fundamental consideration is how to delineate and apportion responsibilities, liabilities, and risks. So in this manner, it's to the benefit of both parties to any contract to particularly apportion risk to the party that is most able to bear the risk. As Alex has highlighted, becoming too punitive with contractors by assigning risks that they may not be able to bear doesn't help anyone. It'll just make everyone ill at ease, create unnecessary angst and adversarial relationships, and therefore will only be to the detriment of the project. And by extension, of course, the owner or the client. Sure.
Thank you. All right, let's move on now to really the next topic we were going to discuss. This relates to questions about records required to prove disruption claims. And so, Craig, this first question is to you. Normally, owners are not exposed to loss of productivity or risk. With the aftermath of COVID, there's a need to capture this differently in new contracts and develop a system of record keeping and a system of keeping productivity. It's a statement, really, rather than a question. But so how would you address that?
Yeah, well, lots of productivity claims fall under the general umbrella of disruption claims, which are distinct from pure delay claims. In this manner, the Hudson's building and engineering construction contracts state the distinction between delay and disruption is important, but rarely articulated, and is to an extent a matter of definition. Delay is usually used to mean a delay to the completion date, which presupposes that the activity which was delayed was on the critical path. Disruption to progress may or may not cause a delay to the overall completion or interim milestones, depending on whether the activity is delayed on the critical path. But it will result in additional cost where labor or plant is underutilized as a consequence of the event. So Usually, most claimants focus on delay claims, as those relate to the extension of milestones and the relaxation of damages. And they're generally better understood by owners or clients. So it's easier to pass those claims through the system. But usually it's the disruption claims that carry the most cost. So as to the first question regarding a possible need to capture productivity claims differently in new contracts, it would be my immediate opinion, without reviewing the detailed contracts, that an applicable clause would usually already exist, provided disruption is identified as a claimable event. What is vitally important, however, is the need for stringent contract administration to ensure that applicable notices are raised for any potential claim for productivity or disruption at the time the event is identified. Notifications serve multiple purposes, but the main ones are that both the claimant and the defendant are provided with an opportunity to mitigate any continuing events or effects of the event, and also for the capture and proper presentation of contemporaneous records as the event or the effects of that event are being experienced. So notifications focus the attention of the parties and are an important precursor event to substantiate entitlement. Although I highlight that a lack of notice does not necessarily vitiate any claim, it can only strengthen the claim if a proper notice exists. As with any claimed entitlement, the claimant must provide 3 basic elements to be successful with a claim for disruption or loss of productivity. Firstly, an event must have occurred that entitles the claimant to loss and expense. That event must have caused disruption, and that disruption has in fact caused loss and expense to be incurred by the party. So the onus on proving these elements rests, of course, with the claimant, although claims will always be assessed based on the balance of probabilities. And the type of documents that can be used to evidence disruption or productivity claims are many and varied. I mean, they could be emails, formal letters, minutes of meeting, progress reports, site diaries, personal notes made in personal notebooks, resource allocation sheets, site photos or videos even, delivery notes, timesheets, QA/QC audits, invoices, records of formal or informal inspections of the site by the engineer or the project manager, or indeed the client, and then witness testimony. So this means that basically any contemporaneous data that supports and evidences the events and the effects that occurred to the works is good data. Of course, the best way to present any claim is to identify and tie each individual event to a specific effect and the associated costs and expenses. But usually disruption claims are more complex than that, and in my experience are usually presented as global claims. There's no reason why such claims carry less weight than specific event claims, considering that all claims are judged on the balance of probabilities in any event. In my experience, particularly in the Middle East region, is that parties tend to be laissez-faire with their record keeping and contractual administration at the commencement of the projects, because the belief at that time is that relationships are good, so why rock the boat? It's only when losses start to accumulate that the parties start to look at the contract and figure out what can be used as evidence. It's vitally important that all parties to a contract plan for the worst case scenario on projects, even before the contracts are signed. A database of contemporaneous records should be established from day one, and all staff should be trained in making and saving precise and accurate records. I'm personally involved with a major arbitration case in the region right now, where the record keeping has been diligent by the claimant, including emails and site photos and written notes, but not so much from the defendant's side. So this has made the claimant's case massively credible in comparison. Records are your lifeline, so give them the attention they deserve.
So once again, records, and you need records that are clear, specific, and accurate right from the outcome. Great advice there from Craig. And that's been an ongoing theme through both of these webinars, grinning through. Alex, anything to add?
Yeah, no, all great points. I mean, as we said previously, the importance of good records can't be underestimated. And think about it in these terms. If you've got good quality records, then with some work, they can be converted into money by a successful claim. Non-existent records cannot be converted into money at all. So, in light of the pandemic, I think particularly it's very sensible for contractors to to consider their procedures for documenting loss of productivity. And video and photographs are very good evidence, as they're real time. So the more real time, the better the evidence generally. But also owners, they should be considering what documents they're keeping to counteract any potential disruption claims. But the best defense and the best claims are successful when they have the better quality evidence.
Thank you, Alex. Another one for you, Craig, here in the same vein, actually. How can we substantiate and show head office overheads in a claim for prolongation costs?
Well, evidencing head office overhead in prolongation claims is a difficult concept to undertake. In my experience in the region, many claimants rely on a percentage approach, particularly in their first submissions of claim documents. I've reviewed some of these claims, although they weren't specifically on prolongation. And the only way we could assess if the percentage was reasonable was to open up the claimant's pricing of the original tender for the works and the pricing basis upon which the ultimate contract was entered into. So naturally, this type of information is incredibly commercially sensitive, and claimants are usually not happy to issue or release this information to their clients, particularly if there's an ongoing commercial relationship between the claimant and the defendant. So that's why it's usually best to utilize third-party independent consultants to undertake the required fact-finding due diligence if you're talking about percentage approach. But a percentage approach will be unlikely to succeed if any claim turns into a formal dispute. Accordingly, parties should, again, from the very beginning of any project, ensure that they are keeping detailed records of the specific costs that are being assigned to the project by the head office, including timesheet allocations, internal budget assignment records, and the like. Then the claimant will need to evidence that whatever event has occurred to create the prolongation has prevented the head office personnel from undertaking other profitable work due to the attention that they now have to provide to the delayed project. The SCL protocol describes 3 different ways that head office overheads and profits can be calculated. These are called the Hudson Formula, the MDEN Formula, and the Eichler Formula. The Hudson Formula assumes and relies on the adequacy of the tender, which therefore can be challenged and lead to further dispute because tenders are notoriously commercially driven. It's also based on a number which already contains overhead and profit. Therefore, it inevitably contains an element of double counting within the formula. And this is why it isn't supported by the SCL. The SCL therefore prefers the MDEN and the Eichler formula, but it notes that the Eichler formula needs to be adjusted if the contract value has been varied by more than 10%, as the SCL assumes that when the variations have been agreed throughout the duration of the project, they've already taken into consideration the overhead and profit that were part of those variations. Hence, the SCL's preference is the MDEN formula. I'm aware that these formulas have all been used in the Middle East region with varying degrees of success, but ultimately there is always a further dispute between the parties as to which one should be used, if they're to be used at all. So therefore, it's my opinion that the parties to a contract would save time and money by pre-agreeing what method will be used in the event of a prolongation claim upfront in the agreed contract.
Good idea there, Craig, to use it up front, because no doubt there's folks among us who will compare the results of all 3 formula for raising and defending a claim. So anything to add, Alex?
Yeah, I would just reinforce the point that it's tempting to just apply the simple percentage uplift approach, but it's best avoided, particularly where the claim reaches arbitration or other formal dispute resolution, because the tribunal, in my experience, will be looking for more than just an arbitrary percentage when considering an award for overheads. And you need to also consider the question of what you need to meet the burden of proof. So, for example, under English law, that would be the balance of probabilities. And I think it's questionable as to whether just docking a percentage is good enough.
Thank you, Alex. Next one for Craig. How can the contractor claim or prove disruption due to inefficiency caused by the employer's events in the absence of baseline planned productivities?
Well, going back again to the SCL protocol, it provides categories for methods to evaluate and present productivity claims, which generally fall into two sections: productivity-based methods or cost-based methods, where productivity methods measure the loss of productivity in resources and then price the loss, and cost-based methods determine the difference between the actual cost and the planned cost without first looking at the resource productivity. So probably the most recognized and arguably most successful method is the measured mile, which distinguishes a baseline productivity level from looking at other similar activities and durations or installed quantities from a time that was not disrupted on the project, and then comparing this with the productivity during the disrupted time period. Hence, the lack of a baseline planned productivity does not necessarily preclude any claim, as it's possible to garner some level of expected productivity from the original tender submissions, as well as from the general undertaking of other activities on site. It's also possible to attempt to utilize other projects within the industry, even projects that the claimant was not involved with, as benchmarks for productivity. The claim could also be presented using the pure cost-based methods, of course. So notwithstanding the balance of probabilities approach that should uphold any method of assessment to an extent, all of these are less convincing than working from an agreed baseline of productivity, which is usually provided by a resource-loaded time schedule at the time of tender or immediately after the contract award.
Thank you, Craig. Alex, anything to add to that one?
Yeah, I think that what really drives the decision on what analysis to use in legal terms is you need to locate the evidence that might be used to show what supports the contractor's planned efficiency at the tender pre-contract stage, and then demonstrate how that was affected by the employer's actions later on. And I think, as Craig alluded to, it's clear that there's not always a comprehensive, fully resource-loaded baseline schedule for every project. But there should be records that are held by contractors to demonstrate certain assumptions that they make about the level of productivity that they may expect to achieve, although some of that is sensitive, as we know. But that's a component of pricing the project to begin with. And I think methodology such as measured mile is useful in certain situations. But I think the other thing to consider is that often a lot of this is addressed by fact witness testimony and expert evidence in particular.
Yeah, and I think a lot of the information on productivity and cost, of course, rests with the subcontractors these days in the modern world. So, you've got to go another level down to get a lot of that information to back up a claim, assuming they're coming into the claim as well. So, just to sum up here before we move on to your questions, we broadly covered how contracts deal with pandemics and how to apply conditions that might apply to the events, and discussed where and how we allocate risks for pandemic, perhaps in the future. And then once again, the importance of record keeping and methods of record keeping that can be used to prove disruption. So now we're going to move on to some of your questions, and we'll go there to number one here. How are the claims related to pandemic to be resolved and remedied? Say the contractor was unable to perform during restrictions. Would these be considered under force majeure clause, even if it's not under the list of exceptional, missing a piece of my screen there, exceptional events to be claimed under the warranty of contract? That one's for you, Alex.
Yeah, I mean, it's a big question. And what I would say is I don't think we've seen yet how claims related to the pandemic will ultimately be resolved. I think the problem with complex engineering and construction projects is that the pandemic will be caught up among a series of other delaying and disrupting events that occur on any project. And I think pulling out the strands to decide what effect is pandemic related and what is something else is an exercise I can see will be time consuming, it will be expensive, and it will be complicated. Three words that contractors and clients don't like to hear generally. But I think it's a real issue. And on the specific points raised, and there's a number in that question, I think first and foremost, it depends what the contract says and how the contract apportions the risks. If there's no directly applicable event, then I think material delivery delays due to travel restrictions, I can see how that could in principle be force majeure. But as I mentioned earlier, it depends on where the force majeure has effect under the contract. is it the country where the works are being done, or is it somewhere else? And whether the effects are unforeseeable or not, I think is also relevant. As I mentioned, it's entirely foreseeable now that COVID-19 is an issue on projects. And so the effectiveness of force majeure is fairly limited because it's relief from performance. So it generally only entitles the party to claim extension of time rather than the additional payment. So I think in overview, the answer to this question is we're not yet seeing it, but we are seeing disruption claims beginning to be made.
Alex, just a general one on that point. Are you being asked to put into fresh contracts now lots of new wording in terms and conditions to cover, pandemics going forward?
Yeah, people are far more alive to it, certainly, and we have specific COVID clauses. Also, in the UK, we had something called Brexit. We've got Brexit clauses. I don't mention Brexit in the context of disease, but I guess some may take that point of view. But all of these things, where there are specific risks, they have to be considered. And it's far better to have them expressly considered in the contract than it is otherwise. I think the problem with the COVID pandemic was it just caught a lot of people cold. And pandemic and epidemic was not something that factored its way into contracts at all, really.
Sure. Thanks for that. Here's one for Craig, a broader question on GLEADS. How much Middle East region does GLEADS have? I assume that means presence, as this is my main base of interest. Craig.
Well, this is a good question, easy question. So GLEADS has been in the Middle East region for 20 years, and we've got 4 existing main offices in the region, Dubai, Abu Dhabi, Doha, and Cairo. Although we're now in the process of establishing an office in Saudi Arabia, and we support projects across all the MENA countries. We currently have about 100 professionals working across the region, and we provide cost management, project due diligence, fund monitoring, and of course, dispute advisory services. We work across all sectors and all levels of the construction value chain. We're also able to call upon our international offices when required, as GLEADS is a collaborative organization, meaning that we can bring in any subject matter expert as required by a specific commission.
Thank you, Craig. How about Fries in that regard, Alex? You'd like to just outline that?
Yeah, sure. Fries is a national UK law firm, so we've got offices in the UK, but we do work around the world, and we do that in a flexible and collaborative approach, basically. So hence one of the reasons working with GLEADS is to work with clients in the Middle East region more in particular. So we are, funny enough, we were built for the pandemic before we knew there was a pandemic, because we didn't have the offices around the world. But I think experience has shown that actually you don't need that. You just need a laptop and Microsoft Teams these days.
Right, or Zoom. Let's go back to the couple of legal aspects here, Alex. If the scarcity of resources, meaning labour, equipment, plant, is caused by the pandemic, can a contractor claim such event under disruption?
Yeah, I think again, firstly, depends what the contract says. And remember that claims for extension of time and additional payment are separate, and so they should be claimed separately. And the answer to this question would depend on whether there's a compensable event that occurred under the contract, i.e. something that permits the contractor to claim for that scarcity of resources, or whether the owner breached the contract so that the contractor can claim damages and the scarcity of resources results somehow from the owner's breach. Of those possibilities, I think I can see how perhaps change in law could lead to a shortage of resources. For example, travel bans is an obvious concept there. I think in which case, assuming the contractor can, assuming the contract allows to claim the change in law, then I think the contractor could probably try to claim the shortage of resource, because it would seem to be a direct effect of what the government had imposed. If you can't bring in labour into the country, there's no labour. I think more generally, I've certainly seen resource shortages being a particular problem on Middle East projects in the past, where you had a number of projects all vying for the same labour, and it was the owner that paid the most generally got the labour on that particular day. Generally, that was seen as a contractor's risk, but I think this is different because COVID has obviously changed things and has potentially generated, let's say, a change in the law, whereas there wouldn't have been one otherwise.
Very good, thanks for that. Here's one for Craig. Craig, if there's a clause of escalation of base material in the contract, such plus or minus 10%, if the rate increases 10% with or without the GST or with the GST, the gentleman says, or the lady says, I'm certifying the same without GST. Is this correct in considering the calculation from the base rate? Explain what's GST to start with there, Craig.
Well, I'm assuming it's goods and services tax.
Yeah, okay.
So I've seen these types of clauses being applied in the Middle East region and in the international arena. Of course, every clause is unique, so it's difficult to provide a singular response. However, in my opinion, goods and services taxes are part and parcel of the pricing of the base material of the contract. Rarely, if at all, have I seen contractors include separate line items in their BOQs for taxes. Hence, they must therefore be assumed to be part of the pricing of the BOQ or the SOP line items, and therefore should be considered with GST when we're talking about this type of clause. This is further justified through the consideration of who is best able to bear the risk of tax fluctuations, given that in the Middle East region, again, at least, most projects are publicly funded, then the clear entity who's best able to bear the risk of a change in tax would be the owner or the client entity, in my opinion.
Thanks, Craig. And another question from the blog here. Alex, what's your take on social distancing and the long-term impact on productivity and costs for projects already procured?
I think that's a really interesting question. And actually, I think it goes to the heart of what I think will be the driving issue for contractors when trying to make disruption claims from now on, really. I think social distancing on project sites obviously means a potentially reduced workforce, reduced gang numbers, restrictions on the number of labourers that may work in an area. So it's not hard to see how, in terms of claims, the bigger impact of the pandemic from those type of restrictions is more of a slow puncture on the project, from social distancing and other things than a blowout. I think the pandemic, some people thought there'd be a blowout, but actually I think we're looking at a sort of slow deflation type effect. And what I mean by all of this is that I think for contracts entered into prior to the pandemic, then the effect of social distancing and other measures on sites are clear productivity issues and output issues, because those things will be affected if the work can't be done in the way it was originally planned to be done. It's clear that will impact on productivity. So I think, as you mentioned earlier, Chris, I think that requires grown-up conversations between the contract parties about what's achievable and what's realistic in terms of planning for completing the project. Rebaselining, for example, could be an option. And it's better to do that, I think, than result in claims, because I think claims, they upset relationships, particularly when you're still trying to complete the project. They are distractions, and they could just cause further delay. So I think pragmatism and having those sensible conversations is a good strategy to address this, because clearly you can't complete the work in the way you originally intended, yet the project must still be completed somehow.
Yes, and I can also see that contractors will be taking more efforts to establish baselines of productivity and costs, in their as they're procuring a project and as they win a project and as they submit the information used to put a contract sum together. I can see they'll take more trouble over that now, rather than just move into what modus operandi they might have done in the prior world, because it's going to be fundamental going forward, assuming this thing's not going away anytime soon. So, Craig, what would be the top 3 focus areas of claims management to overcome the challenges of VUCA, VUCA world? And I don't know what VUCA is. Do you know?
Volatile, uncertain, complex, and ambiguous.
Thank you for that.
Yes.
Describes lawyers, doesn't it?
So, yes. So in our VUCA world, as we've already highlighted in this webinar, the 3 focus areas of claims management are records, records, records. But to be a little less facetious, records are definitely number 1 focus area. And I'm always surprised at the lack of lessons learned on this topic by all members of the construction value chain in this region. There are many proficient record keeping and EDMS systems available on the market, and some of those have been tailored specifically to the formation and defense of claims. So the relatively small commercial outlay on this part of the project will inevitably bring massive benefits once disputes start to arise. My second focus area would be the proper administration of the contract. Too many times have I heard and seen parties not sending notices or not sending entitled variations or claims because they don't want to upset the other side. This emotive culture is leading to maladministration of contracts and lost entitlements to both contractors and clients. The contracts don't care about emotion, hence nor should the contract administrators. The contract is your Bible, so use it properly. My third focus area would be the training of staff, so that everyone is able to understand and distinguish what is or is not claimable under any given contract. This avoids any individual employee from saying or writing something out of turn that could affect commercial or contractual entitlements. And it will also highlight the risk management aspect of contract planning, because in a VUCA world, risk management is certainly a key aspect. Now, I've also got a fourth focus area. I know you didn't ask for a fourth, but my fourth is to embrace technology. The construction industry in general is very slow to evolve and change, but there are many useful tools out there to record and measure progress, like BIM or satellite imagery, drones, GoPros, and the list goes on. So remember, whatever supports and strengthens your claim or your defense is worth the effort.
Thank you, Craig. And here's another, a broader one from the blog, very broad question. Would be interested to know how COVID impacts can be managed from a contractual viewpoint. So that would be one for Alex.
Yeah, it will be interesting. I think any risk can be managed contractually, as long as you know what the risk is. And I think with COVID, the problem was nobody knew it was a risk until it was. And I think it remains that a lot is uncertain. And I think it's safe to say that we know that COVID has potential from this day forward to impact projects, because we know that it has impacted projects and we know how it's impacted projects. It's led to shortages of labour. It's led to increased costs of materials. It's led to government restrictions on doing things. So I think particularly if you're a contractor or you're subcontractor, I think your point of view is important. From your point of view, it's important to include those express drafting clauses that we talked about to deal with the potential effects of the pandemic going forward. Remember that force majeure is not likely to be a good argument anymore, because we're not talking about something that's sort of unforeseeable or that could have been guarded against. So as far as it's possible to say that there's a market position at the moment, I think extension of time for COVID effects seems fairly uncontroversial. But as I said before, the contractor's entitlement to additional payment seems to be a project by project based approach. And, a lot of things affect that. Who's the contractor, who's the owner, how big is the project, what's the project for, etc. But ultimately, I think the general rule for contracting is that risk should be taken by the party best placed to manage it. And I think COVID creates a really, really big question about who that is. And of course, it varies project to project as well.
Interesting. Thank you. Broad answer to a broad question. Last one here from the blog for Craig. Many forms of contract make it a condition precedent to issue timely notices and supporting documentation. However, the parties may lose their rights by not doing so. So why do these onerous clauses remain in contracts? That's an interesting strategic question. Let you try that one first, Craig, because I'll be interested to see what Alex thinks of that too. Why are they there?
Sure. Well, as I explained earlier, notices are an important part of the commercial management of any project. Unfortunately, the forms of contract that are used in the MENA region tend to be notably adversarial in their framework, and project actors in the region tend to exacerbate this adversarial approach. In the UK, in contrast, partnering contracts such as the NEC suite are leading to notably better commercial results for contractors and owners, particularly on large-scale complex infrastructure projects. And notices on those types of contracts are called early warnings, with the intent of stopping or mitigating any claimable event before it arises or while it's happening. So this is what a notice of claim is meant to represent. It's meant to allow both or all parties to have a chance at mitigating the event and the cost or the time impacts of the same before they reach their maximum. Without a notice, one or other of the parties may not even know that the event is occurring. Hence, the lack of a notice could prejudice their ability to save costs or time. This is why the notice clause exists. While punitive language in regional contracts attempt to invalidate claims that lack a notice, I've seen these contractual clauses overridden under local law provisions. Hence, the claim does still proceed, but then the claim will be viewed against a background of the lack of opportunity to mitigate and or keep contemporaneous records of the event. Hence, the overall success of the claim can be diminished because of a lack of a notice.
Thanks, Craig. I'm going to press on here, but I'm going to let the attendees know that it's 7:50. It's 58 minutes, 2 minutes to the hour right now. We're going to go on another 5 or 10 minutes. So just to try and get a couple more questions in here. One for you, Alex. The pandemic appears to have affected currency exchange rates and thereby impacted project costs. And some are saying that in both directions, where materials and equipment are imported. Would this be considered disruption? And would this thus be acceptable as a line item for a claim? So that's an interesting one about currency exchange rates.
Yeah, I think my reaction to that is I struggle to see where the disruption is. I can well see that the cost has increased, but I can't see that that's disrupted the project. I think this is not so much a disruption claim, rather it's a fluctuations type claim. So if there's a fluctuations clause that allows for claiming the increased cost of materials and labor, then this is probably claimable, I would say. I don't think it's a disruption effect. I think that's a difficult one to pin on the owner if you're a contractor, because the owner's not responsible for fluctuations in global currency. So I think it's probably from a disruption point of view, contractor's risk, but there may be another clause that gets you out of it if you have fluctuations provisions agreed. If it's clearly the case that the contract basically is a lump sum fixed price and that's it, I think you're in more difficulty.
Yeah, would you care to comment on that shipping issue that we were chatting about?
I mean, shipping is, I think, slightly different. There's issues with shipping costs at the moment, and people on the call may be aware that the cost of shipping is vastly increased in 2021 compared to previous years, and that's due to COVID and closure of world ports, lack of availability of shipping containers, etc., etc. It inevitably drives up the cost, and so parties are looking at whether they can claim those increased shipping costs. And I think in some circumstances maybe they are able to, and in others it may not be quite as easy. So it's a bit of an open question at the moment. I think a lot of these issues that we're looking at the moment we're seeing them for the first time because, as I said before, we're now looking at the slow puncturing effect on projects rather than the big blowout, and these things are all being worked out at the moment, really. But it's interesting.
Yeah, that is, broader macro question, that one. And I don't know how you ever prove that the currency exchange rate actually changed because of a pandemic, or was it going to change anyway just because of other economic factors? That would be difficult.
Well, that's one of the points we're looking at is, can you claim the actual costs that you're now experiencing, which are largely driven by the pandemic, or can you only claim what normal inflationary costs would have led to a new event?
All right, one more question here for Craig. And someone said, also, I've seen some claims prepared by contractors where delay and disruption have been grouped together into a single claim. What are the pros and cons of this? And how should we clearly define and differentiate disruption from a delay? Because there's often a crossover there between the two. And so how do you go about separating the two to make a claim valid, if you like, Craig?
Well, as I discussed earlier on, delay claims are basically shifting the milestones or providing relief to damages effectively, moving interim milestones, moving completion milestones, whereas disruption is related to non-milestone related activities. So disruption is, again, loss of productivity. It's less ability for the contractor to complete the works. So, and that cause cost, of course, it has to, of course, cost. So I don't see necessarily an issue by grouping delay and disruption together. Of course, especially if the event is the same. You know, an event may have caused one activity to move beyond an interim milestone or a completion milestone, but another activity has been disrupted by the same event. So in that case, it makes sense to group them together. So I don't see necessarily a need to divide these things. And there are many, as the question states, I've seen many of these examples in the Middle East region. And you just have to take each claim on its merits.
Thank you. A question came in here I thought was interesting. Alex, is there case law for any of the formulae that the Ebden, Hudson or ICLAY that we've mentioned?
Off the top of my head specifically, I don't know, but there probably is. I mean, certain methodologies have got more support than others. And I think the formulas and methodologies that Craig mentioned are no doubt some of those that have been under consideration, and they are the ones that are used. And I mean, a lot of the work that I do internationally is arbitration, so you don't get reported cases in arbitration. So I think in the UK, some of those formulae are probably used a bit less. The measured mile comes up certainly in English case law.
Sure.
But yeah, there's not really, I can't sort of point to the top 5 cases because, as I say, a lot of the work is arbitration. And the UK market is a little different when it comes to using formulae. I know that formulae are used a lot in the Middle East.
Interesting. So I've got a tongue-in-cheek one here that came up for both of you as we close this out, and that is, the pandemic's obviously cost everybody a great deal of money: contractors, suppliers, vendors, owners. It came from nowhere. What's the next global disruptor that's unforeseen, in your opinion?
I go first on that. I'm going to give a positive answer to this question. I think there'll be a positive global disruptor in the engineering construction industry, which will make it far more productive and efficient an organization as a whole. As Craig says, construction engineering is terribly out of date in terms of the technology that it uses. And I've seen a study where there was one industry that was found to be less efficient and productive than construction, and that was agriculture. And that tells you something about where the industry is at. If you compare it to something like manufacturing or aerospace or tech, construction is way behind the curve. So my personal hope is, rather than talking about negativity of pandemics, we should all be talking about how we use digitization, advanced work packaging, off-site construction, assembly, not construction, how we use technology to make the industry safer, to make it more efficient, and to cut the cost of projects and avoid disputes. That's what I hope.
Very positive. Thank you, Alex. How about you, Craig? Do you have any thoughts on what might come at us next?
No, but I do recognize and agree with what Alex has said. I think there are some amazing things going on with prefabrication and 3D printing of buildings now and things like this, which I think that's going to be the disruptor, the positive disruptor for sure.
Of course, on the negative front, we all hope we're going to be able to mitigate the issue, but I would imagine that there could be some major climate change disruptors as they occur in different parts of the world. And you could see, for example, the fires in Australia last year. I imagine that contractors have some sort of claim from those events. That must be a force majeure event, mustn't it, Alex?
Well, that's an interesting one. Weather and force majeure is generally quite complex. If you were to say, okay, we had 2 weeks of exceptional storms and rain. If your project site is in the middle of England, so what? Welcome to England. If your project site is outside Riyadh, yeah, it's a force majeure event, without doubt. but the climates are changing such around the world that maybe storms in Riyadh will be something that projects have to consider in the future, although right now it would certainly be a force majeure event.
Good. Thank you for that, of course, and that's why contracts are written with force majeure in them, for sure. Yeah. Right. Well, I wanted to thank everybody for attending. It's important to just mention again the Gleeds and Freeth's A to Z construction disputes service, and again that we're here to serve. And if anybody's got questions relating to those projects, please send them to advisory@gleeds.qa, or Alex, Craig, or I can help directly. So we'd be happy to just communicate with the QA webinar to start with, and we'll get back to you. We hope the session's been valuable. Thank you all for attending. We hope you can all get your vaccinations very soon and stay safe and well in the meantime. And thanks to all those that helped put this webinar together from our team. And goodbye from Atlanta, Dubai, London, and Melbourne. Thank you.